heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
And big tech, it's on deck. Alphabet, AMD, Microsoft. It is time to show the impact of AI. We'll get you what you need to know ahead of their earnings.
Neuralink puts its brain implant technology in its first patient. We have all the details on a big step forward for Musk's company that aims to let humans control computers with their minds.
And the culture of crypto, how famed VC Chris Dixon sees the current investment environment for the next era of the internet.
This is day one of a massive week for the mega cap tech earnings, Cara.
And we've got the perfect voice to just highlight what we are expecting from these results, from Alphabet and Microsoft in particular. Tech giants really, as we say, under pressure to live up to that AI hype. Here with the breakdown is Jackie Davalos over there in Washington. And Jackie, just how much are we likely to see any sort of revenue and profit being driven by this investment thus far?
It's a big show me the money moment, and we're nearly a year into this AI boom. They have to have some kind of evidence. There's a reason it's a bit harder to quantify because AI is embedded in so many different parts of the business, but there are a few places where we can look to see proof that their AI bets are paying off. For Microsoft, it's that Office 365 Copilot product. They made this widely available to more consumers and small businesses earlier in January, but even before that, they launched it in September and have really been amping up the hype around how much it can impact productivity. Those subscription figures will be key. For Google, it's a little bit more complex because they have been a little bit slower to push this out into their search tools and their productivity suite. But here we can look at the Google Cloud profit numbers. We saw that hit a new profitability level last year on the back of that AI startup business that they were capturing. But again, they don't have a clean figure like NVIDIA has their A100 blockbuster chip to really point to for that AI evidence.
You've set us up really well in today's Tech Daily. I was looking at the EPS forecast, right, and it's a pretty big range. Like Microsoft, 51% EPS growth expected in the quarter gone. Then you compare with, 19% for Microsoft, 51% for Google, Alphabet, the parent of Google. And so let's shift to that Alphabet story because we're super excited. Caroline's excited. I'm excited. You're excited. Google is an advertising business.
That's right. When you think about it, it's their juggernaut. They have to be very strategic when it comes to how they're deploying some of these AI features. Unlike Microsoft, which is more than happy to boost its Bing search engine, only has 3% of the market share. It doesn't really have much to lose. Google here has been looking to kind of take a more experimental approach. And now that you have Gemini coming out in September, investors are going to want to see a plan for how this is making a difference. You're also going to be looking at YouTube figures. Are AI features yielding any fruit when it comes to, that search advertising and the YouTube engagement levels? Is that making a difference? But again, it's a little bit early to tell from the Google front.
All right, in the few hours that remain before those companies do post numbers, check out the preview that Jackie Davalos wrote in that newsletter, Bloomberg's Jackie Davalos out of DC. Thank you. Let's keep it going. The conversation next is with Adam Benjamin, Fidelity's tech lead. And Adam, let's think about it a bit more holistically. If you go to the index level, S&P 500, across that magnificent 7 bucket, and let's strip out Tesla because it's been and gone, we see 46% EPS growth, right? The only comparable sector is utilities. So it is that AI story on paper that's driving the gains. But do you expect to see real terms contribution from AI products this week?
Hi, good morning. Thanks for having me. So look, I think AI is obviously a big overarching trend that's going to play out over many, many years. And we're really early days in this evolution. So, what I would say is clearly for your guests and for your audience, everybody's paying attention to what this earnings season is going to bring. But But this is a journey. And what I would say is we're at multiple phases of this, and how we think about this trend, we've been tracking it for many, many years, is really we're at sort of the picks and shovels phase today in terms of the infrastructure and compute that needs to get put in place to train these models and eventually put these models in place and for production, like you mentioned, Microsoft Copilot, and to get that productivity. So I think this is happening, but it's taking time.
Adam, earlier today we spoke with the chief of Norway's sovereign wealth fund, and he reflected on what's been with the AI contribution in the equities market and what's to come. Have a listen to this.
We've had a huge rally last year, and a very large proportion of the returns we had in the fund were from the top 7 companies, right? Now, if you adjust S&P for that, the return was something like 12% instead of 26%. And you kind of have to ask how long that's going to go on for. Now, I'm a diehard believer in AI and the effect it's going to have on our operations and the world generally. But in terms of valuations of the companies, that's a different question.
So that's Nikolai Tangen, and that's his thesis, right? He sees the impact on AI in the real world, but right now he's questioning the valuation of those companies that are driving the story. Are you questioning it?
I think the way I'm thinking about it is last year was pretty much an AI basket, right? Everything that had some exposure to AI was a winner. You had a lot of stocks, especially even in Q4, up 40 some odd percent. I think 24 is really about differentiation, and the fundamentals are going to have to come through for certain companies that are really true AI winners, and where some will be determined that they really aren't true AI beneficiaries. I mean, last week, for example, we saw Intel report numbers and guidance, and it was pretty disappointing relative to what the street was expecting, and that was a stock that was up 40 some odd percent in Q4 of last year alone. So, I think we're going to start seeing that differentiation as you go through earnings, but it won't be just this earnings period. It'll be multiple earnings as we go forward throughout the year.
I want to ask about concentration risk. And of course, you are someone who has really won out on some of the allocations. Of course, when you're managing overall funds that are, of course, named things like Fidelity Advisor Technology Fund or the VIP Technology Portfolio, Semiconductors Portfolio. These are names that have won, Adam, but the quants over at JP Morgan, for example, are really getting worried about concentration risk. Is that something, do you think these names are vulnerable because they've just become so important to overall benchmarks?
Well, look, I mean, I know a lot of people focus on the Mag 7 and they talk about the concentration of technology. I have the benefit of being a technology-focused investment manager. And so I run, as you mentioned, tech funds, just tech, and then just semiconductors. So I don't really focus that much of the concentration as it relates to tech, how it's concentrating the rest of the market. What I would say is, as you look at the Mag 7, there are companies that have a broad exposure. I mean, Tesla is focused on the electric vehicle market. Microsoft and AWS and Google are overlapping in the cloud computing market, but they're all different in terms of their core markets with Google and search. And so, really, I think you got to look at them as independent companies that have really amazing business models, and that the overarching theme is that they are benefiting and getting exposed to AI. And in terms of how they're using that and how they're going to change their businesses is super important. But it's not just those companies that are going to, adopt AI. It's everything in tech, and then it's every company outside of tech. Because if you're not adopting AI and making your business more productive over time, you're probably going to be a loser in your end market. So I think this is the theme that's going to touch all companies across all subsectors of the market.
I mean, just look at UPS today, 12,000 jobs going, but a real focus on generative AI coming from the CEO. Adam, I'm interested, therefore, when you're looking and anticipating the calls, the analyst calls with CEOs, what is it that you want to hear? Is it more about subscriber growth? Is it more about number of customers and overall market penetration, or is it bottom line impact? You want to see the numbers?
Yeah, I mean, it depends on the company, so it's hard to say definitively. But look, we're looking for, every 90 days, these are report cards for these companies. So it's, how are they doing on the revenue growth? How are they doing profitability-wise? Obviously, last year was a huge year for efficiency for some of these companies in terms of the pull forward that they saw during COVID on OpEx. So we need to see revenue growth from here, and a lot of stocks that we saw significant outperformance was multiple expansion in 2023. So you're going to have to see, the true fundamentals actually drive these stocks in 2024, as your guest, indicated earlier. So I think that's what I'm looking for, and it'll depend on the company. But really, a report card every 90 days. And we're long-term investors. We're trying to find companies that are going to be the winners over the long term. And those are companies that we've been investing in multiple years. We've cited these as big trends, and we've been there for a while. And we'll see where things progress. But this AI is not going to be, snap your fingers. It's going to take time. And so I think people need to be patient about it and see where things are progressing. And as long as they're moving in the right direction, I think people will be encouraged about this theme.
See how the execs can articulate it today. Adam Benjamin, really great to have some time with you. We thank you so much. Fidelity's tech lead there. We thank you. Meanwhile, coming up, look, let's talk about underlying technology. Neuralink has its first ever human patient, bringing Musk's startup that little bit closer to its goal of letting people actually control their devices with their minds. We'll be back with more in a moment. But Ed, what have you got?
Well, just based on what Adam was saying, here's a new name for you potentially, Supermicrocomputer, up 4% right now, have been up as much as 11%. It's a AI server maker, think rack design, and they've significantly updated their sales forecast for this year. But the real reason I bring it up is this is a stock that's up more than 80% in the last 30 days, more than 600% year to date over the last 12 months, massively outperforming Nvidia as an example, but we don't really talk about it. $29 billion market cap, one of the winners of what's happening in the real terms infrastructure play for AI. This is Bloomberg. Musk's Neuralink has given an implant to its first ever human patient, bringing his startup a step closer to its goal of letting humans control computers with their minds. Bloomberg's Lynn Doan has the details and joins us from New York. I mean, Lynn, this is the first step, but it's the step, right? We've been waiting for Neuralink to do this for a little while. What do we know about the procedure, the patient, and what the point of this was?
Yeah, it is the first step for Neuralink. And I don't know about you, but at this point in our adventures into neuroprosthetics, I'm impressed by any kind of brain interface implant. So I'll call this a win. What do we know about the procedure? Neuralinks in particular involves a robot that funnels its way into a person's head. Sounds a bit terrifying, but it uses a robot to implant a little chip that's about the size of a quarter. And that chip is connected by thousands of wires and electrodes to the human brain. And in that way, it allows, hopefully, theoretically, the human brain to be able to control electronic devices with just a mere thought.
And that's why those that have been, the patients that have been recruited are those with quadriplegia or those who suffer from ALS. In fact, Musk wrote on his own social platform X about sort of imagine Stephen Hawking being able to be able to communicate far faster than a sort of speed typewriter. But he's not alone. Neuralink isn't alone, and we sort of let it steal a lot of the headlines, but there are other companies doing this.
That's right. I was just talking earlier this morning about a company, Synchron, who almost over a year now announced that they had done the first brain interface implant in the United States. So certainly Neuralink is not the first company to enter into this era of actual implants. Now, what some would argue is that it has more advanced technology, that the devices themselves are more complex and more capable than some of the others in the space. It involves thousands of wires. Like, imagine what that thing looks like, a spider with thousands of legs versus some of the other ones who may not make use of as many wires.
Once again, we'll see how telepathy, as the product's going to be known, continues to evolve. Brilliant, as always, to have Lynn Doan joining us. Volkswagen, VW, well, it's feeling the pressure of a slowing EV market and 2023's dim IPO landscape that's continuing into 2024. they're going to hold off on plans to seek outside investors for its battery unit. Now, sources say the car maker worries it won't be able to make its own batteries at the scale and is no longer prioritizing stake sales or a potential listing of PowerCo business this year or indeed next. Now, this is fresh off Renault's similar decision to ice its EV arm listing amid market volatility. We're going to have a deep dive on the auto sector. That's next, Ed. What have you got?
Yeah, there's a bigger conversation to have here. And sticking with the EV market, Mazda posted its best sales year since best sales year and third best year overall today. They announced the release of a new vehicle, CX-70. President and CEO of Mazda North American Operations, Tom Donnelly, joins us to walk through their results and the latest launch. Tom, this is how I think about it. CX-70 brings you to the mid-size SUV. You have the full spectrum of hybrid options, but that's where it's at. It's a hybrid option. You're still not there with pure play EV. So in the context of CX-70, what's the strategy here?
Yeah, so we're very excited about what CX-70 represents for our brand and our portfolio. As you said, we had our global reveal today. We look at, let's say, the electrification market as that of an intentional follower. If I look forward through 2030, we're going to have a full suite of electrified vehicles. And we have a three-phased approach to how we're going to introduce plug-in hybrids and hybrid vehicles. So we talked about CX-70 in the introduction today. Last year, we introduced CX-90 with a plug-in hybrid and a mild hybrid version. And later this year, we're going to introduce CX-50 with a hybrid version as well. So we feel like we've got the right technologies for the marketplace today. And again, by 2030, we'll have a full lineup of electrified vehicles.
Tom, one of the questions from our audience on X was, what happens if long-term the consumer just doesn't go for EV, that they do have a bias towards hybrid? And how would that impact your strategy? I think about the comments from Toyota, right, where they see this 30% cap on BEV and a future, well into the future, multiple drivetrain formats.
Yeah, again, I use the term multi-solution approach, and that's what we've been working for a number of years, where by having hybrids and plug-in hybrids and then a full suite of battery electric vehicles as well, we think we'll be able to pivot to the market and what consumer demands will gravitate towards. So we feel really good about our overall strategy right now. Again, we're excited about CX-70, the mild hybrid and the plug-in hybrid, what that represents. And it's a new segment for us. It's an emerging segment in the industry. So we're really optimistic about the impact it's going to have on our brand.
And I can kind of see why you're optimistic, given your sales number in December, record numbers. I'm really interested as to what you're seeing from a consumer right now, Tom. We've just heard from Renault, as we're saying, VW. You've got, of course, GM being more cautious on out-and-out EVs. What are you seeing from a consumer adoption and desire to be spending on big purchases such as new cars right now?
Yeah, the market still is strong overall. I mean, the industry is strong. There's definitely been a shift towards more, let's say, affordability. So we've noticed from earlier in, let's say, the calendar year. But you're right, we ended 2023 on a really high note, up 23%. And I would say it's not just the quantity, but the business quality for us as well. More specifically, we had our best customer experience results ever, our best owner loyalty results ever. So while we're growing the brand at a pretty impressive rate, 23%, this is on the heels of, again, really strong performance across the breadth of our business.
And where is that brand really penetrating at the moment? Is it about a US user, a European user? More globally, are you thinking about China and indeed competition coming from there?
Well, my focus is primarily in the US market in North America. And again, we've achieved some really impressive results over the last 4 years. Each of the last 4 years, we've gained market share in obviously a very challenging time frame, from COVID to supply chain issues. We've been able to really be very nimble and improve our performance year over year. So, and we're really optimistic about what 2024 represents. We think if we execute our plan, we're going to have our best year in the US market ever. So we're really optimistic about the outlook.
Well, we want to thank you, Tom Donnelly, ending on an optimistic note, Mazda North American Operations President and CEO, really seeing traction right here in the United States. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Let's look at what's happening in the world of Bitcoin, because it has been 5 straight months, in line 4 of gains for this particular asset. Like, we haven't seen that back since the heady days of COVID, when everyone was plowing in their money in 2020. We're up 50%, as you'll see, over that course of 6 months. And a lot of that is to do with the spot Bitcoin ETFs. We've had volatility of late. Let's talk to Ophelia Snyder for her thoughts on it. Of course, president of 21 Shares, which offers crypto ETFs, ETPs for institutional and retail investors, including that recently launched spot product, ARK 21 Shares Bitcoin ETF, developed with Cathie Wood's ARK. And, well, we have overall seen excitement, exuberance, perhaps a run up and then a fall as people digest what really happens. But what have you seen in terms of flows, and are they making you confident?
Yes, is the extremely short answer to that question. At the end of the day, these flows have been really promising. It's one of the best ETF launches of all time. We've seen north of $600 million in assets come into our product just in the last couple of weeks. That's really exciting because it's coming from a diversified base. And so while, yes, you're seeing some churn through legacy products, you're seeing movement towards new product in the market that actually has a lot of really critical features towards welcoming advisors into the community, which is ultimately, I think, how we're going to start to see the crypto ecosystem evolve from here.
Of course, 21 Shares is crypto native, and you've been doing a lot of the futures offerings already. You've been bringing the first ever ETPs related to these sorts of ETH and Bitcoin futures, and now, of course, the spot Bitcoin. What, therefore, of new spot products across other altcoins?
So we've actually been doing this for more than 5 years. So we brought the first physically backed spot products to market in Europe about 5 years ago now, and we cover a very wide range of assets through that platform, and we run about 40 products outside of the US. So it's quite a big cohort, and there's a lot of technical infrastructure that goes into supporting that, which we're really excited about bringing to the US. I think in the US it's going to take a little bit more time. I know we have some Ethereum applications that are out there in terms of new ETFs coming to market.
You think the SEC will go with that?
I think it's really hard to say at this stage. It's going to come down to how the arguments that were made in support of a spot Bitcoin product actually translate into Ethereum and what the maturity of that market looks like. We're obviously really optimistic about it, and we're looking forward to engaging with regulators on these topics. But I do think it's ushering in a new age of clarity, which we've seen in other markets around what these regulations look like and what that means for the development of crypto markets. And I think, as we've seen over the last 5 years while we've been doing this, there's typically a process here where once things start moving, it becomes much easier to have that ongoing dialogue.
Ophelia, there's a lot of data at our disposal to judge how is this going. Bloomberg crunched the numbers, and across the 10 ETFs that are out in the market, they attracted net $1 billion. But to me, that doesn't seem like that much. After all the hype of recent weeks and months and all the investors around the world that weighed in and said, we're looking at it, is $1 billion a lot? What does it tell you about current demand or appetite to get into this?
So what it tells me is it's very early. I think one of the pieces that's often missing in these narratives around these ETFs is actually there's an adoption cycle. Just because a product exists doesn't mean everybody has access to it. It takes a certain amount of time for these products to be added to platforms, for advisors to get them through compliance and due diligence. Sounds really boring on paper. The reality is that's when they're going to be looking under the hood and making sure these products actually behave properly. That's where you're really going to see operational excellence and expertise like ours come to the forefront and have those discussions as we bring these products onto advisor platforms. So for where we're standing today, the majority of the sort of intermediated assets in the United States don't have access yet. What you're seeing in that net $1 billion in just a couple of weeks is primarily being driven by either independent platforms or quite a bit of retail, quite a bit of self-directed. We haven't yet gotten to the place where you're really seeing advisors or models begin to include these types of assets. You have to get through that diligence process. They need to sort of battle test them and make sure that you're bringing best-in-class infrastructure to these products. And I think that's when you're going to actually see that shift. But that process takes about 3 months.
Ophelia, you wrote in your most recent newsletter about a Bitcoin-dominated news cycle. What happens next? Another Bitcoin-dominated news cycle?
So historically, you see waves. We're sort of midway through a Bitcoin-dominated news cycle. The halving hasn't happened yet. The halving being obviously when block rewards to miners are reduced by half, which is expected in April. I think through that cycle, you're typically going to see a lot of focus on Bitcoin or on what we would call blue chips. You've seen quite a bit of focus on things like Ethereum and Solana in the last couple of months, both from the crypto native community as well as from advisors and investors outside of the United States who have access to these investment vehicles. So I think that's been very interesting. We'll likely see that. Typically, you start to see more interest in alts, especially initially the larger ones, but eventually down that longer chain as you get further into a more positive cycle for crypto assets. So I do think we'll likely stay in Bitcoin for a little while longer, but that will likely expand from there.
Ophelia Snyder, president of 21 Shares, warning us we're only halfway through a Bitcoin-dominated news cycle. More to come. Thank you very much. Now, coming up on this program, we're going to dive even deeper into that news cycle and into the crypto investing landscape with Chris Dixon, founder of the A16Z crypto practice. This is Bloomberg Technology.
We're just talking about the dominance of Bitcoin in the lexicon of crypto recently. But what about the broader Web3 space? Where is the investing happening at the moment? I've got the perfect voice. Chris Dixon, founder and managing partner of A16Z Crypto. It's the VC fund at Andreessen and Horowitz that he founded in 2018. $7 billion in committed capital dedicated to crypto, to Web3 technologies, but also the author of a new book exploring the impact of blockchains on the future of the internet. It's called Read, Write, Own, Building the Next Era of the Internet. It's out today. Chris, it's a joy to have you on, and congratulations on, I'm sure, a labor of love.
Yeah.
That labor of love is trying to talk about some of, shall we say, the cultures within crypto. Thus far, Bitcoin, crypto more broadly, has felt like a culture, as you put it, is like maybe the casino. It's more about investing, it's more about speculation. When does it become about usability, utility?
Yeah, and so that's what my book is about. It's about the productive side of blockchains, not the sort of speculative side that you see so much attention focused on. I believe that blockchains can be the foundation of a new era of the internet. So the internet has become increasingly consolidated. The top 5 tech companies account for 50% of the NASDAQ market cap, NASDAQ 100 market cap, up double from what it was a decade ago. Google and Apple have a duopoly on mobile operating systems. The top 1% of social networks account for 95% of social networking traffic and so forth. I think blockchains are the only credible technology for countering that consolidation and returning the internet to its original ideals as an open and democratic network. So that's what my book's about, not the kind of speculative side, but the productive side. And that's why the entrepreneurs I work with are excited about the space. That's why we're investing in the space. And so I wanted to tell that side of the story because I didn't feel like it had been heard enough. Because,
I mean, you come from both sides. You made your name with great bets on Kickstarter, on Pinterest, but then you really started to double down in the areas of Coinbase, Solana. I mean, the list goes on of some of the exposure your portfolio has now, Uniswap. Yeah. Where is the energy going, and how much is that, dare I say, starting to dovetail with the new explosion of AI, for example?
Yeah, so I view blockchains as an expansive technology where you can build games, social networks. A lot of interesting stuff is happening around new ways for creative people to make new income streams. So, for example, by selling digital collectibles to their audiences.
Make music.
Like music, which is particularly important, I think, in an age of AI, because AI, I think, will put downward, generative AI lets you create content very cheaply, and therefore will put downward pressure on a lot of creative people's business models. And so I think it's a very important time to create new business models. Another example with AI are things like deepfakes, right? So we're seeing the internet, more and more deepfakes. I think you're going to see more and more sophisticated things like phishing attacks. And in that world, having a system where you can have, one of the things that blockchain is very good at is keeping sort of the provenance of a video. So you can say this video came from Bloomberg, and you can cryptographically prove that. And that can be very important in a world where, what was once ground truth video now becomes unreliable. So and by the way, I'm very pro AI, I think it's very exciting, but I do think it's important to have counterbalancing technologies, and I believe blockchains are a counterbalancing technology to AI.
Chris, I want to go back to kind of the origin of the rationale behind blockchain, right? So if I apply this blanket term DeFi to everything that we've just talked about, what's the conclusion you reach in the book about your own attitude towards the promise of DeFi?
Yeah, I mean, so DeFi, that of course refers to decentralized finance, which has been an interesting area. I think like with finance in particular is a highly regulated area, and so I think we've been working very hard on sort of policy matters and trying to put forth proposals. And so I think for DeFi I think there's a lot of really innovative stuff that happened in DeFi, and I think people underestimate how successful in a lot of ways it was. So for example, with all of the market volatility of the last couple of years, these DeFi protocols like Uniswap and Compound and others performed perfectly, did not have issues. That said, I think to sort of realize its true potential, we have to figure out ways for DeFi to expand beyond kind of the internet culture into the broader world. And I think that raises, in that case, it's very important to work with regulators, to work with existing institutions, to work with exchanges and all the other kind of participants in the broader financial ecosystem.
Chris, what happened to the ecosystem of startups then last year? Caroline and I look at all the backward-looking data, shows that if you look at it from a venture-backed deal count or dollar perspective, 2023 was a more difficult year. How did your funds perform, and what were the lessons you learned through that?
Yeah, we're a regulated RIA, so I'm not allowed to speak about our own returns, but I will say that my view, if you look back kind of at the history of technology, is that innovation and financial markets are pretty independent. And so, for example, Facebook and YouTube were started in the sort of post-dot-com, after the dot-com bubble and the crash. Microsoft was started in Apple in the 70s in a very high interest rate environment. So, if you just kind of look at what we do, mostly early stage investing, and we think that we really look for technology trends and how they're moving and less sort of the day-to-day movements of the financial market. So we've been very active. We've been continuing very consistently to deploy capital. We find great entrepreneurs. I'm very excited by the entrepreneurs that we see in the space. That's what I try to talk about in the book, is just all of the new and exciting ideas. I really feel like some of that story hasn't been fully told. And so I wanted to represent that and show kind of all the new things that can be built using this technology.
So when you are thinking of how much you've deployed already, are you able to give us an update of whether that cadence is growing at the moment, whether you've deployed most, whether LPs are like, yeah, we love it, we're going to commit more?
Well, we have I don't know what exactly we are allowed to disclose from a regulatory point of view, but we have plenty of, we're well capitalized, and we're excited by, the way I look at it is, if great entrepreneurs walk in the door, we have capital and we will give them capital. But we don't have sort of a pace and try to put money out to work if we don't find great people and great ideas. But I think lately especially, there was sort of obviously like FTX and a lot of, sort of negative things that happen. I see a real kind of renaissance beginning at the early stage with innovation and just new ideas. And so I would expect that we would, we have been, and I would expect we continue to remain very active in the early stage venture, in the activity.
Chris, it's an election year, and policy, future regulation, future legislation has been a discussion for your industry for some time. How do you approach your lobbying efforts this year, or your communication with both sides of this election race to build a long term?
Yeah, I started going to DC a few years ago to sort of talk to policymakers about these topics, and one of my realizations is that big tech, big banks, lots of other kinds of parts of the economy are well represented in DC. We felt that small tech, that startups did not have proper representation. So we as a firm have decided that we are an institution that can help with that. And so we've decided to get more active in politics. We're taking a bipartisan approach. Our stance is pro-tech, pro-startup. I think that a lot of stuff, particularly around blockchains and crypto, is playing out in courts. And the problem with courts is it takes many, many years, and that creates uncertainty, and uncertainty deters good actors and attracts bad actors. So, I would argue that the right way to sort of approach tech policy is to look at a technology holistically. Every technology has bad things and good things about it. AI does, crypto does, and the right policy, sort of is crafted to maximize the good and minimize the bad. And so that's what we advocate for.
I'm interested in ultimately where you're seeing this renaissance coming from and happening. By its very nature, often those that are building in crypto are decentralized as well. And the application thereof, I think of Sky Mavis and how Axie Infinity just blew up in Asia in particular. Where is the excitement right now, and where do you invest? Is it always in equity? Are there token investments that you still want to make?
Yeah, we do both. We do equity and token investments. In terms of location, New York is actually, I would say, in the U.S. is sort of the hub for blockchain activity. But it's really a global movement. It's happening all over the place. China's doing a lot in Hong Kong. It's Asia's very active. Korea, Japan. We just opened the UK office. There's a lot of things in Europe. So it's a very global movement. I think more so than most technologies. And I think that also maybe skews some of the perspective in the US, because like a lot of the technology, for example, stable coins, which are basically digital dollars, are very popular. There are 600 billion in transactions last month alone. And a lot of that happens around the world. And we don't see it as much here because we have, you have your credit card, you have your Fed and your credit cards, the payment systems work quite well here. And as you know, we obviously have access to the dollar, but that's a very popular product around the world. So it really is a global movement.
Chris, we have 10 seconds. Do you hold Bitcoin or any other digital tokens personally?
Gosh, I'm very bullish, and I do have a lot. I don't know. I'm not supposed to talk about my particular holdings, but I do have a lot of crypto. Yeah.
All right, Chris Dixon, founder, managing partner over at A16Z Crypto, with a book out today. Great to have you on the program. Thank you.
Thank you, Caroline.
Time now for Talking Tech. And first up, IBM is giving its US managers who are still working remotely an ultimatum: either move to a location near the office or leave the company. This according to an internal memo seen by Bloomberg. Managers must live within 50 miles of an IBM office by the start of August. And social media platform X is reactivating searches related to musician Taylor Swift. Searches for her name were temporarily disabled after explicit AI-generated images of Swift made the rounds on X. Other public figures have recently become targets of deepfakes, and that includes President Joe Biden. Plus, TikTok is testing a new feature that would make video posts shoppable. The feature will use technology that can identify objects in a video and encourage viewers to find similar items on TikTok Shop. A spokesperson confirmed the feature is in an early test. Karen.
Let's get more on that from the person who's been writing all about it, Bloomberg's Alex Barinka. And before we delve into some of the focus of Washington in social media land right now, focus on where they're trying to evolve. I mean, so what, any post that I put on TikTok, they can hunt maybe the makeup that's behind me or whatever I might be wearing?
In theory, that's what this test would do. TikTok's technology basically looks at the post and they'll see, hey, you're trying on a lipstick or you're walking your dog with a leash, and link you to a shopping page filled with items that are tagged with, quote, similar to the video. Now, this is really interesting and a departure from how shopping works on TikTok right now. Right now, currently, brands and creators and influencers who are approved actually go in and tag products to their videos. And while that's got a lot of people to purchase on the app, it's also got some users complaining. These influencers and brands are obviously incentivized. They want to drive revenue or make commission in the influencer's perspective. So there is some complaints there. Layering on this technology, though, will kind of ensure that these videos are not just people trying to sell you something. You could actually shop from something that is not making a sales pitch, but just a video of interesting rocks that a geologist is sharing on the internet.
The user sort of response is interesting because there's the items themselves, some of them are not legit. And then in some cases, according to your reporting, the tech isn't working 100%.
Yeah, exactly. There have been issues with both counterfeits and copycat items that we've written about, particularly in the beauty space, people purporting to sell brands like Charlotte Tilbury when it is not, in fact, a brand like Charlotte Tilbury. Or there are examples like the one I saw before I wrote this story where I mentioned a geologist showing off rocks. Well, the technology tagged a bunch of nail products and rings to that particular video. So if you're somebody who enjoys precious gems, I don't know if nail polish is the right product for you. So it does seem to be that this is going to be an evolving process. As you mentioned, this is a test for them. But what this would certainly do is kind of supercharge their e-commerce push. I've been told by people familiar with the matter that internally at the company, commerce, particularly in the US, is top priority. So it seems like they're trying to pull out all the stops to get people purchasing off those entertaining videos on TikTok.
And of course, we wait to see what the leaders of these businesses, not just TikTok, but X and Instagram, Meta more broadly, what they have to say on Capitol Hill tomorrow. I'm sure we'll be checking in with you then. Alex Barinka, we thank you so much. Meanwhile, that does it for this edition of Bloomberg Technology, Ed.
Yeah, thank you to everyone this week that told us you listen to the show as a podcast. I find that so interesting, Caro. Keep messaging us. Tell us where you watch the show, how you listen. But the pod is on Apple, Spotify, iHeart, and of course, we put it on all of the Bloomberg platforms. Don't forget also that we are a live TV show and we love it when you tune in. From New York City and San Francisco, this is Bloomberg Technology.